Hi, I'm Jarrad Brown, Australian expat financial planner based here in Singapore. And welcome to my video series where we tackle the tough personal finance questions for Aussies all over the world. Now it's COVID-19, we have a global pandemic, people are losing their jobs, businesses are shutting down, and people are considering relocating back to Australia or back to different countries altogether. Now, today what I'm here to share with you are my 5 very broad, very general tips for preparing for your repatriation back to Australia. Whatever the reason may be for your move, or even if you're just thinking about what a move could look like, hopefully you'll find these tips helpful. So let's dive right in. To kick off with one of the most alarming items when it comes to moving back to Australia, it's the tax rates. If you're moving back from Hong Kong, Singapore, Dubai, wherever it may be, in a much lower tax jurisdiction, Australia is going to be a bit of a surprise. With our top tax rates north of 47%, the same rates applying for capital gains tax, it's important to be aware and ready and prepared for this change if you are looking to make a move back. There are very limited ways to actually reduce your tax in Australia, but 2 of the most common ones you can start thinking about and preparing for are superannuation and property investment. Now, when it comes to superannuation, there are 2 important elements to be very mindful of. One is any of your unused concessional contribution caps that may have accumulated from the 18-19 financial year while you've been living abroad. Important to check this one with your accountant or your financial planner and see what you may be eligible for in terms of catch-up contributions. Now, if you're not sure what these are, you can check out our other resources. We're not going to dive into all of the detail on this video, but there's plenty of resources up on our website and our channel already on these. The second is salary sacrifice contributions. So from the 1st of July 2021, the concessional contribution cap has been lifted to $27,500, which is a tax-deductible contribution. So if you're not already contributing that much to your superannuation fund, very worthwhile speaking to your accountant, speaking to your financial planner, and working out whether you should be. This can make a meaningful difference to the net amount of tax you're paying and at least bring that 47, 48, 49% tax rate down to a more reasonable figure. The second, as I mentioned, in terms of reducing your tax in Australia, is investing in residential or commercial property. Now, we're not suggesting that it's a one-size-fits-all approach and everyone should go out and negatively gear, but if you do already own investment properties or you're thinking about buying one or buying a portfolio, this could be a handy way to reduce your tax. Again, we're not going to dive into the intricacies of negative gearing in this video. There are other resources out there, so feel free to check those out. They're up on our channel already, but it can be a useful way to reduce your tax. Also very important to be mindful that at some stage in the future, the negative gearing rules may very well change depending on Australia's leadership. So do just be mindful of this, do your homework, seek professional advice, consider whether you should rent the place you live in, buy an investment property, buy an investment and the place you live in, think about how you structure your debt. There are a myriad of considerations here, but if you are considering going down this path, as I said, could be a useful way to reduce your tax liability. The third item to consider is how you own your investments. Now here I'm not talking about property, I'm talking about shares, managed funds, bonds, ETFs, your mark-to-market assets that you've been accumulating while you've been abroad. Now the reason this is important is because once you enter Australia and become an Australian tax resident again, all of a sudden these assets could be exposed to Aussie tax. So start thinking about how you should actually own them once you're back in the country. Should it be through a superannuation fund, a company, a discretionary family trust, in joint names between yourself and your partner, in a bloodline trust, in an insurance bond? There are a myriad of different options to consider here. They can all have very different tax implications, so start doing your homework early and preparing for the move that way. The fourth, and very much in line to item number 3 when it comes to your investment structure, is considering what you're going to do with your offshore investments once you're back in the country. Do you have an offshore pension? Do you have an offshore investment account? What role is that going to play in terms of your wealth accumulation strategy once you're back in Australia? Are you going to continue to fund it? What will the FX implications be? How will this help your retirement? What goal and what purpose is it really there to achieve? Start thinking through these things early, and that way you've got a lot less to do once you hit the ground in Australia and you can get on with your life back home. The fifth and final, quick and general tip if you're planning to move home is to do a bit of an insurance review. So check out your health insurance, your life insurance, your income protection, whatever else you may have set up while you've been abroad, and work out if they're actually going to cover you once you're back in Australia. Do you need to notify them about a change of address? What happens if you need to claim on them from Australia? Should you actually transfer them over to an Australian insurer? Should you utilise your superannuation to pay for them? As you can sense, there's a lot of questions to be asked here. It's a lot more simple than just, is this one cheaper than that one? You really want to work out what would happen in the event of a claim and how easy would it be for myself or my family to actually go through that process. Very important to check out if you've got health insurance back in Australia, work out if you're going to unsuspend it and resume an old policy. What are you going to do with Medicare? All of those moving parts play an important role. And finally, sit down with your financial planner if you're working with one offshore, whether in Singapore or elsewhere, and start putting together a bit of a plan for your repatriation. Make sure you've got dates and deadlines set for everything, and you'll find that you have a lot less to worry about once you're back on the ground in Australia and paying tax back in Australia. I hope you found these tips helpful. I hope it's shed a bit of light on what to think about if you're looking to move home. If you are, I wish you a smooth and successful journey back, but do feel free to reach out if you have any questions. If there's anything you feel that we've missed, let me know in the comments. Please do subscribe. Thank you very much for tuning in, and see you next time.